makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Markets on edge as traders gear up for a week of political and inflation risk, with elections, a US presidential debate and the Fed's preferred price gauge all on the agenda. Bloomberg's poll of polls shows Marine Le Pen's far-right national rally making further gains over President Emmanuel Macron's party ahead of the first round of France's snap elections. Plus, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds go head-to-head in a live debate right here on Bloomberg, 10 days before Britons cast their ballots in the general election. We will discuss that and more with Philip Hammond, the former UK Chancellor of the Exchequer and Foreign Secretary, who joins us live here on set in a few moments' time. It is a big week, as well as the politics, for the economic data. We are getting data right now in terms of the Ifo Business Confidence Index for Germany for the month of June, coming in below the estimates. 88.6 is the number. The estimates had been for 89.6. In terms of Ifo expectations, that index coming in also below the estimates. It's a print of 89. The estimates had been for 90.7. The Ifo current assessment index also a little softer, marginally softer, 88.3 versus the estimates of 88.5. But the redhead is focused on the business confidence part of this survey, coming in below the estimates, 88.6 versus the estimates of 89.6. Euro dollar at 107, checking in on the moves right now on a one-day basis in terms of the trade. 107, just a little bit higher, up 0.2% versus the US dollar. This is giving us a little bit more clarity, of course. We get inflation data out of Spain, Italy and France later this week, which will all feed in to the direction of travel for the ECB. Let's check in on the European markets right now. A little bit of upside coming through after a week, in fact, where you ground higher for European stocks. US stocks ended Friday, slightly lower, but in the session today, this Monday, modest gains coming through. In the basic resources space, a bit of a challenge there. There's slightly softer iron ore prices tied to fresh concerns about the real estate market of China and a build-up inventories in the world's second largest economy. The FTSE 100, though, managing to eke out gains so far in the session. We, of course, continue to monitor the risks, the political risks of France, with new polling data suggesting that Macron's party remains in third place. In terms of US futures, let's flip the board and have a look. Euro dollar, we've just marked that at 107. Also looking at the crypto space because Bitcoin remains under pressure. You can tie that arguably to what's happening in terms of expectations around interest rates out of the US. 62,000 on Bitcoin, the biggest, of course, cryptocurrency in market cap terms. S&P futures currently pointed to gains of 0.1%. Euro dollar up 0.2 at 107. Now, later today, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds will go head-to-head in a live televised debate moderated by Bloomberg's Anna Edwards here at our European headquarters. They're also going to face questions from Britain's leading business groups. Viewers in the UK can catch the business debate 12:30 p.m. UK time Monday on Bloomberg TV. For our international audience, it's also going to be on the terminal, the website, YouTube and on Bloomberg Radio. So ahead of that debate, very pleased to say we are now joined by former UK Chancellor Philip Hammond. Also with me is Bloomberg's UK correspondent Lizzie Burden, of course, has her finger on the pulse firmly of all things UK politics and economics. Philip, thank you very much for joining us in the studio. And Lizzie's going to come to you with a couple of questions as well. I want to start with where we stand in terms of the electoral fight for this Conservative Party, and particularly the news out of the weekend that potentially 4 senior members of the Conservative Party have been allegedly linked to putting bets on the timing of the election. Is it fair to say that that is the nail in the coffin of any Conservative Party hopes of avoiding a landslide Labour victory on July the 4th?
Well, look, the polls are certainly pointing towards a significant Labour victory. I think that's the reality of where we are. My own view is that for many of the electorate, the die was cast back in 2021, 2022, the shenanigans in Downing Street during Boris Johnson's reign, the short-lived Liz Truss government. I think many people made a decision then that they wanted to change, and it's been Rishi Sunak and Jeremy Hunt's misfortune that despite having done a perfectly decent job in office, It hasn't shaken people from that view. So I think the issue now is about, if we do get, as the polls suggest, a Labour government, making sure that we've got a credible opposition to hold that government to account. Because I'm afraid I don't buy much of the stuff I'm hearing from the Labour frontbench team. I think their heart's in the right place, but I think they grossly underestimate the challenges they're going to face in addressing Britain's economic problems.
We'll certainly move on to that and get your views in more detail on that. But before we do, I just want to get one more question on this betting scandal, and whether, I think for some, it will point to symptomatic, arguably, some would argue, of the challenges, the corrosive nature, the rot at the centre of this Conservative Party. Would be the allegation from some that this is symptomatic of a fundamental issue eating away at the heart of this Conservative Party. Would people be wrong to come to that conclusion?
I think that's an overstatement of the problem. There is a problem, and I think the problem comes from leadership, and I think we've gone through a period when the top leadership of the party has not sent strong enough signals about the requirement to comply with basic codes of ethics. I mean, people in politics, people in public life have to know instinctively what is right and what is wrong. And knowing that you can't place a bet on an election, the date of which you're partly privy to setting, is sort of ABC 1, 2, 3. Everybody should know and understand that. But we've been through a period, a couple of years ago, when there was a very corrosive mood around ethics and rules in politics, and a sense that no rules applied. And I think that's deeply damaging, and the sooner we can sweep that ethic away and get people focused back on what I would call a traditional approach, a public service approach to holding public office, the better.
So would you draw the same parallel that Michael Gove has drawn between Partygate and, as it's now being known, Gamblegate?
Yes, I think that's right. I think that's when the rot set in.
And would you say that actually your party could do with a bit of time in opposition to regroup?
Well, look, in a democratic society, it's right that parties alternate. To be very honest with you, I don't think that's the debate we're having here right now. The debate we're having now, looking at the polls, is whether it's healthy for the country for the Tory party to be reduced to a rump. And it isn't. It isn't good for Keir Starmer and the Labour Party. It isn't good for the country. It's certainly not good for the Conservative Party and the future of our economy. We need, whoever's in government, we need strong, coherent opposition. And the attack from the right, fragmenting the Tory vote, tempting people away to vote for a man I can only describe as a snake oil salesman, offering solutions to Britain's complex problems that are apparently simple. That's the paradox of populism, offering these very simple apparent solutions that will not deliver and that only may, in the end, make people more and more angry that their problems are not being addressed.
And to be clear, you're talking about Nigel Farage.
I am.
The head of the Reform Party, who is that threat on the right for this Conservative Party. One complex issue that this country and others face is what is happening on the ground in Ukraine. So we've drawn your experience as Defence Minister, and he's come out, Nigel Farage, with what many would say are pretty controversial comments about who was at fault in terms of Russia's invasion of Ukraine. I wonder if a significant gain for the Reform Party at this election would be a victory for Vladimir Putin.
There's no doubt at all that Nigel Farage is acting as an apologist for Vladimir Putin and his aggression in Ukraine. There's no question of who's at fault. One country has invaded another without provocation. The fault lies in Moscow. The fault lies with Vladimir Putin. That's the end of it. And to suggest otherwise is frankly just to give succour to Britain's adversaries.
So there's no culpability on the West's part for Russia's invasion of Ukraine. There was no sense that anything that the US or the EU did actively encouraged this to happen.
I don't think the West or the US did anything to encourage Russia to invade Ukraine. Absolutely not. But look, we've got to be clear about this. Independent sovereign nations have the right to engage with other nations, to contemplate joining international organisations, so long as they're for defensive purposes. That's absolutely inoffensive. And it's quite wrong and dangerous to suggest that, for example, Ukraine negotiating with the EU to join the EU could be regarded as a justification for a military invasion and the slaughter of hundreds of thousands of people. It's absurd, it's preposterous, it's grotesque, frankly.
And just to come back to the threat from Nigel Farage to the Conservative Party, do you see a world in which potentially he could take over a merged Conservatives and Reform new party post-election?
Well, I don't think so, because I agree it's a threat we need to consider. What Nigel Farage is doing is splitting the anti-Labour vote in a way that the only outcome from which would be, frankly, a less effective opposition to Labour. And as I said earlier on, while I'm prepared to concede that the Labour Party has said some things which are welcome, like it's said that it understands that economic growth is the only solution to Britain's problems, it also does not have a magic bullet or even a master plan for delivering that economic growth. And when it fails to deliver, my fear is that it will be dragged to the left by the forces within the Labour movement. And at that point, the quality of the opposition, the unity of the opposition is going to be crucial to avoid the country being pulled off course and negative messages being sent to entrepreneurs, investors through excessive taxation, excessive borrowing, excessive government interference, excessive regulation, all the things that we know the left tendency within the Labour Party, I'm not talking about the leadership, but the left tendency within the Labour Party would love to see.
Has this been a Conservative Party, the one that we're seeing right now, of high taxes? I mean, historically, we draw back to the Second World War in terms of where we are, in terms of the overall tax burden. Where would you like the tax cuts to land? And do you how much faith do you have in the Labour Party in terms of their commitments on tax?
Well, I'll be perfectly honest with you. I would like an honest debate about this with the public. There is right now no scope for tax cuts unless we are prepared to see significant reductions in public services going forward. Because of our demographic profile, with the population getting older, more people outside the workforce, fewer inside the workforce to support them, that's not a problem that's going to go away anytime soon. This is a structural challenge facing the country. If we can achieve very high levels of growth, very high levels of productivity growth, then there's a chance we can work our way through that. But there will be some difficult decisions to be made. And anyone who tells you that you can have tax cuts and improve public services is not being straight with you.
OK, the complexities of how to fund the future government, whoever takes over. Philip Hammond, of course, former UK Chancellor and former Defence Secretary, of course, amongst another number of different portfolios across the UK government over his time in service. Plus, of course, our UK correspondent, Lizzie Burden, with the questions there as we lead up to the vote here in the UK on July the 4th. Coming up, we're going to take a look at how markets are positioning going into the second half of 2024 amid that political risk, certainly out of France, and what data we are watching out for this week. This is Bloomberg. Welcome back. This is The Pulse. I'm Tom Mackenzie in London. Now, markets are at a critical juncture for positioning into the second half of 2024, with the outlook for central bank policy rates unclear, murky, amid heightened global political risk. We're also getting a lot of inflation data out later this week, including the PCE gauge out of the US. All of that, of course, building into these markets this Monday morning. I can now bring in Wei Li, BlackRock's Global Chief Investment Strategist and Managing Director, brilliantly positioned, of course, to talk us through what this market is facing. Wei, in terms of that uncertainty, the inflation risks, the central bank uncertainty, the inflation question, and then the political risks, how should investors be thinking about the near-term challenges? Is there a case for standing and staying on the sidelines until we get more clarity?
Well, if we de-risk and stay on the sideline because of elevated uncertainty, we would have missed the incredible rally in the US equity market so far this year. So the answer is not to stay on the sideline, but to deploy risk budget strategically and deliberately. So specifically to your point about all this uncertainty coming from inflation and also with the elections coming up, how do we think about it? Let's take them one by one. Inflation, we have PCE coming up this Friday, but CPI and PPI have been better behaving recently, so it is reasonable to expect PCE to continue this narrative of inflation slowly coming down, not in a straight line, but goods deflation still having room to take overall inflation lower, supporting the case for Fed starting to cut rates this year, which is why markets currently pricing close to 2 cuts.
Does that seem reasonable, 2 cuts at this point?
It is our expectation for this year, 2 cuts, and this stands in sharp contrast to what markets were pricing for at the beginning of the year, 6 cuts. So it has come a long way towards the high for longer narrative.
You and the team were never at 6 cuts at the beginning of this year.
We were talking about 2 cuts at the beginning of the year.
And they've come around to that view.
Yeah.
Longer term on the central banks and the neutral rate, because I know you have a view on this, R* and where we land. You do think the neutral rate is going to end up higher than maybe historically, at least recent history has had it?
Absolutely. So we think that neutral rate has risen to reflect the higher inflationary environment that we are in now because of the structural forces coming from aging population, coming from geopolitical fragmentation, and also coming from the low carbon transition. So in the context of the higher inflationary environment and also higher indebted levels, not just in the US, but across developed market economies, neutral rate has risen. But on top of that, central banks are likely going to have to even lean against that. So even stay tighter than what neutral rate would suggest because of the new structural environment that we're in right now, which is why
what then is the implication for how you position in the equity markets? Where are you finding positioning that is resilient to that higher neutral rate from the Fed?
Well, in equities, we like equities. We have been overweight equity for a while now, specifically preferring equities over bonds. So if you think about kind of the higher for longer rate environment that supports higher nominal earnings, which we have seen coming through, supporting the momentum of equities so far this year, but higher for longer may not be as interesting for bonds if you're looking at bonds from a capital appreciation perspective. If you want to click coupons, certainly now you can collect higher coupons for a longer period of time, but we like equities better at this juncture because of the earnings momentum and also the fact that you can use specifically US equities to play the AI megaforce.
Yeah, and you've been very clear in terms of your preference, or at least your how you favour the AI trade, and you think that has a way to run. What would you say then to those cynics who would say this does have echoes of the dot-com bubble, particularly the likes of Cisco, and you're not going to talk individual names, but Cisco in 2000, a big play in terms of its hardware building out for the internet. Now you see chip makers as well within that space. How do you justify what we're seeing? How do you address the concerns that this is an overheated market and that at some point it's going to run out of steam?
Well, the difference between what we're seeing right now versus kind of the dot-com bubble is that earnings are coming through, and it's not just kind of earnings expectations are getting revised higher alongside equity price going higher, which is almost in lockstep, but also these companies are actually surprising to the upside versus the elevated earnings expectations. So, and pricing power of some of these chip makers is really unparalleled at this juncture. So we do think that there is more to go, but Magnificent 7 or Magnificent 6 or 5 is not necessarily the only way to play the AI theme. So if you think about the significant infrastructure build out that is needed to really provide kind of the ecosystem for the AI theme to be adopted on the overall economy-wide scale, infrastructure, industrial, material, energy consumption is almost still underappreciated. These are the sectors that we would like to kind of think about as AI theme broadens out, not just public market, private market as well, infrastructure in particular.
Okay. Really interesting in the broadening out of that AI theme. Wei Li, thank you very much indeed. BlackRock's Global Chief Investment Strategist and Managing Director on the near-term and longer-term risks and opportunities, of course, in these markets. Wei Li, thank you very much indeed. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. A redhead crossing the Bloomberg terminal right now, and an update in terms of Ghana's negotiations with its creditors. Ghana has come through with a deal in terms of restructuring its deal with Eurobond holders. This has been confirmed. The details coming through then. Ghana's bondholders will forego about 4.7 billion US dollars of their claims. This is according to the government of Ghana in a statement. It's an agreement in principle, and it entails important concessions from bondholders. Again, according to this statement, it also provides debt relief to the government of Ghana. So that's an update in terms of the negotiations between Ghana and its creditors, coming to a deal on restructuring around part of that Eurobond debt. Coming up, investors are on edge over the French elections. We're going to take a look at how traders are navigating the risks as the most recent poll suggests further upside for Marine Le Pen's party and more pressure for the party of President Macron. That is coming up next. This is Bloomberg. Welcome back. Markets post modest gains here in Europe. US futures point higher as well. A big week, of course, in terms of political and inflation risk with elections, a US presidential debate and the Fed's preferred price gauge all on the agenda. Bloomberg's poll, the poll shows Marine Le Pen's far-right national rally making further gains over President Emmanuel Macron's party ahead of the first round of France's snap elections. Plus, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds go head-to-head in a live debate right here on Bloomberg 10 days before Britain votes in the general election. Good morning and welcome to The Pulse. I'm Tom Mackenzie in London. Before we get to UK politics, let's go to France, where the latest, of course, suggests there are further gains for the national rally, further gains in terms of the polls, of course, ahead of the first round of the parliamentary elections on Sunday out of France. According to Bloomberg's poll of polls, the party is now on more than 34%. That's the national rally, the party of Marine Le Pen, of course. Meanwhile, investors are on edge over the prospect of a change in the balance of power. Bloomberg's Julien Pontus has more on that, but first, we begin with the politics, and Bloomberg's Caroline Conat joins us with the details. Caroline, Macron trying to explain his decision to call the snap election that has injected so much uncertainty into the body politic of Europe and the markets.
That's right, Tom. And in fact, 2 weeks after he called those snap elections, many within his own troops still don't really understand why we are there, why we are 1 week before a first round of a legislative election in France. And even within his own camp, in fact, a majority of MPs running again for his party, Renaissance, have chosen to not have Macron appearing on their campaign leaflets and instead have the current Prime Minister, Gabriel Attal. So this kind of shows you the extent of this kind of not understanding within his own troops. Over the weekend, he tried to explain his choice once again, saying that he had no choice and we had to change the way we govern. And he was not blind, but conscious of the democratic malaise within France. He was talking to a regional press in a letter over the weekend. And he knew he couldn't keep going with using this 49.3 constitutional provision, which means bypassing parliament when you have a big reform. That's what Elizabeth Borne, for example, had to do to pass the pension reform. He knew he couldn't keep going like this, but he said again, trying to reassure the market that he will remain president no matter what happens on July 7.
Caroline, what, meanwhile, do the polls tell us about his fortunes as we count down to the vote, the first round on Saturday?
The national rally of Jordan Bardella is actually increasing its lead in our Bloomberg poll of polls, 34.2%, followed by the New Popular Front, this Union of the Left, at 28.2%. And coming third, you have Macron's Renaissance Party at 20.6%. So The likelihood is that we're going to end up with a scenario where Macron will have to share power, likely with a prime minister from either the National Rally or the New Popular Front. That's what we call in France a cohabitation. That hasn't happened since 1997 with Jacques Chirac and the socialist prime minister Lionel Jospin. Now, this week will be eventful. Before the first round on Sunday, we have Jordan Bardella actually doing a press conference in half an hour from now. Then we're going to have the first debate tomorrow night on TF1 national television between Gabriel Attal for Macron's party and between Jordan Bardella, of course, for the National Rally, and Manuel Bompard for the far left, even though Gabriel Attal has actually asked Jean-Luc Mélenchon to replace the far left in this debate because he knows that Jean-Luc Mélenchon is a turnoff for a big part of the moderate left-wing electorate. Now, that debate is going to be interesting given the cost, the spending that we've heard from the New Popular Front on Friday. They're planning 25 billion euros in spending just for this year, then 90 billion euros a year until 2027. And they're planning to finance all this with measures including reinstating the wealth taxes and perhaps even introducing a 90% tax on a top marginal tax rate for income above $440,000. The last time someone tried that was François Hollande in 2012 with his 75% tax on income above 1 million euros. That was blocked by the Constitution, and at the time, Emmanuel Macron himself said that this would have meant France, this would have made France like Cuba without the sun.
OK, Caroline Cornin, thank you very much indeed. Yeah, you'd imagine there are some sitting in the financial heart, La Défense, of course, in Paris, who might be sweating at the prospect of 90% taxes. Caroline, thank you very much indeed. We stay on this story because French banks, highway operators and utilities have been at the forefront of a $240 billion sell-off on the Paris bourse. The CAC 40 is actually posting pretty decent gains so far in the session, and sovereign debt of France has also bid modestly, of course, after the sell-off that we've seen. Let's bring in at this point Julien Pontus, the Bloomberg's French equity markets reporter in Paris. Julien, what is at stake then for investors?
Damage control. There's no upside scenario from here. It's really about how you can protect your investment. So you have two types of investors I'm speaking to: people who need to be invested in France, say a French manager selling French equity exposure, and those who can arbitrate between different geographies. The one who can go basically have a lot of them have capitulated, so they went outside of France, in Europe, in the US. Some are being more aggressive and are shorting the CAC 40, for instance. Those who need to stay in France, because that's what they do French equities, they basically sold off banks, they sold off utilities, they sold off concessions, motorway operators. There's a long list of companies that are being sold, and there's very little companies that are being bought. What people are trying to do basically is figure out the companies that had the biggest footprint outside of France, like industrial companies who make, say, 80-90% of their sales outside of France, and they're putting their money in there. But it's a very tricky situation for investors.
What are some of the other adjustments that you're seeing that are kind of consequential amongst the investor base at this point?
French debt. A lot of people just won't touch it anymore. They don't see the upside. Whatever happens on July the 8th when the Paris stock market opens after the election, it's a very big stretch to see any rebound, a substantial rebound. There will be more uncertainty. There will be less visibility. We're really in uncharted territory here. So it's really a stretch to see any rebound from here. So if you need to be invested in France, there are a few strategies. As I said, like you would find them more global companies, you would invest on that. But if you're, say, a Brazilian or a Japanese investor, I I don't see them buying the dip.
In the meantime, of course, we're counting down to the first round of votes and the first round of this election. This weekend, we have that debate that Caroline was talking about. What else are markets looking at? What are they monitoring as they try to adjust as best they can to this, as you say, pretty unprecedented political backdrop?
So some brokers, are saying don't go into the French market between now and the results on July 8th, basically. One big risk is that you could have a wipeout of Macron's party on the first round. So maybe we'd have more visibility come Monday morning, and basically there will be no doubt that for instance, that Macron's party will lose, and it will be between the far left and the far right. That would be, and it's likely it will be, a very volatile period for markets. The last week before the second round. So yeah, I would expect a lot of volatility within these 2 weeks.
Okay, Julien Poutus, Bloomberg's French equity markets reporter in Paris. Thank you very much indeed in terms of how French and international investors are adjusting to the political risk of France as we head up to that first round, of course, on Saturday. Thank you. Coming up, China and the EU agreeing to hold talks on the bloc's plan to impose hefty tariffs on electric vehicle imports. Automakers in the Eurozone getting a bit of a lift on the back of this news. We discuss the details next. This is Bloomberg.
Things I really get excited about, because I'm a labor economist by training, and I think a lot about the distribution of opportunities across the nation and the world. And I think of AI as potentially being a great leveling the playing field, democratizing the expertise by giving people a hand up or a leg up in terms of starting.
San Francisco's Fed's Mary Daly there on AI creating opportunities in the labour market. Now, Beijing and Brussels have agreed to start talks on the EU's plans to levy tariffs on Chinese-made electric vehicles. Let's bring in our Global Autos editor, Craig Trudell, then with the details. Joining us out of Oslo this morning. Craig, why, after deciding to put tariffs in place on Chinese EVs, is the EU now agreeing to hold talks with China?
Yeah, the EU really approached this differently, at least in their view, and I think in reality, than say Washington did, or even we've seen other countries, including Turkey or Brazil, put in place higher tariff rates on electric vehicles, really out of concern of the amount of volume coming out of China and flowing into these other markets. And I think there's a real effort, and has been, really since these were implemented, to sort of, differentiate and to lay out the case for, hey, we went out at this with a months-long investigation to get to the bottom of just how much, subsidization has been applied to this industry, and really came up with, you sort of did the math essentially, and are showing our work in terms of, just how much of a tariff needs to be put in place company by company based on how much support they've had over the years.
So that will be part of the message that EU officials will bring to their Chinese counterparts. What else are they going to be using in terms of this discussion, this debate, this negotiation to try and put pressure on China, to try and push through some accessions at least?
I think, I would assume that there is going to be, some sharing of some of the particulars around this investigation to kind of, lay out the case for why these tariffs have been put into place. There's also, I think, going to be a desire on the part of folks on the Brussels side to really try and limit the extent of sort of return fire, if you will. So there's already been, threats made of putting tariffs on imported vehicles with large engines. That's a big concern for the Germans in particular. Volkswagen and Mercedes and BMW are very worried about that. But also beyond the auto industry, I mean, the threats being put on, everything from dairy to wine to French brandy. So this has the potential to, become something much more than just a trade fight over cars. There is, a concern that this boils over into something much more, and that there's more of a sort of back and forth tit for tat here, along the lines of what we saw, during the Trump administration between Washington and Beijing.
Well, Craig, what is your assessment of the propensity of Chinese officials to go full force on this then, in terms of the reality, in terms of actually putting in place restrictions to try and essentially punish the EU over this? What have we been hearing from Beijing in terms of their potential response?
Yeah, I think our executive editor, John Liu, spoke to this earlier this morning, Europe time, about this idea that, in China, there's going to be a desire to really sort of, get some concessions here, show that they've been tough on Brussels and extracted something for their companies. I think, I do think there's also some consistency in terms of, one of the things that does align Washington and Brussels is this concern about overcapacity. And so while China will sort of message, to this idea of, big companies like BYD and CATL are setting up shop in Europe and hiring workers in Europe to make electric vehicles and batteries. One of the big concerns that you hear from Brussels and Washington is about the extent of overcapacity in China. So even if there is some on the margin, investment outside of China, what is going to be done about the fact that there are so many car companies and battery companies producing so many vehicles and batteries? And to what extent can the rest of the world even, possibly compete when, they're working with workforces that are paid more and sort of undercut by the fact that China just has so much capacity and such an advantage in terms of price.
OK, the overcapacity issues and risks emanating from China and how to address those. Our Global Autos editor, Craig Trudell, thank you very much indeed in terms of the latest on that front. Now to some other stories making news. This Monday, Apple is to withhold a range of new technologies from hundreds of millions of consumers in the European Union. The company announced on Friday it will block the release of Apple Intelligence, iPhone mirroring and SharePlay screen sharing from users in the EU when the services are released later this year. It says the bloc's regulatory attempts to rein in big tech has forced it to downgrade security and place user privacy and data at risk. Beijing-based ByteDance and US chip designer Broadcom have discussed a potential collaboration on an AI processor. That would help the TikTok parents company development of that technology. Bloomberg has learned a 5-nanometer purpose-built chip was discussed. Reuters has reported the proposed chip would comply with US trade restrictions on China. And Prosus and its parent company, Naspers, have posted its first ever profit. This as a new chief executive officer prepares to take the helm in July. The e-commerce business, which excludes the Tencent stake, reported a full-year trading profit of $38 million as it managed to scale its business after years of investment. Coming up, former UK Chancellor Philip Hammond calls Reform leader Nigel Farage a Russian apologist for saying that Moscow was provoked into war with Ukraine. More on that story next. This is Bloomberg.
No doubt at all that Nigel Farage is acting as an apologist for Vladimir Putin and his aggression in Ukraine. There's no question of who's at fault. One country has invaded another without provocation. The fault lies in Moscow. The fault lies with Vladimir Putin. That's the end of it. And to suggest otherwise is frankly just to give succor to Britain's adversaries.
Former UK Chancellor Philip Hammond there giving his view on comments from Reform leader Nigel Farage that Russia was, quote, provoked into war with Ukraine. Let's bring in UK correspondent Lizzie Burden then, who was with me for that interview, of course, with the former Chancellor, the former Defence Minister as well. Strong comments on Farage. What did you make from what we heard from the former, again, Defence Secretary, which I think is important, and Chancellor of the Exchequer?
Yeah, of course, he was Defence Secretary at the time of 2014, when these problems were happening in Ukraine. He was also Foreign Secretary as well and Chancellor, so really interesting to get his take across the suite of policy being debated in this election. On Nigel Farage, he says that you need to consider the threat that he actually takes over the Conservatives after the election if there is a merger with Reform, although he didn't see it as the most likely possibility. We also talked to him about the accusations that some members of the senior Conservative Party have been betting on the date of the election, essentially insider trading. And he said the rot set in with Partygate under Boris Johnson. He actually drew the same parallel that Michael Gove, the Cabinet Minister, made between Partygate and Gamblegate, as it's being described. And it's interesting because polling shows from YouGov that actually Gamblegate is cutting through to voters and it's threatening to dominate this last stage of the campaign, which is not what Rishi Sunak wants to hear. And yet, as Lord Hammond said to us, it's not healthy for the Conservatives to be reduced to a rump. You really need a strong, coherent opposition. But if the polls are correct, it doesn't look like that's what the Conservatives are going to amount to.
Any chance they can change the narrative with the debate that's going to happen here at Bloomberg, 12:30 p.m. UK time, business secretaries and shadow business secretary taking each other on?
Yeah, I'm very excited for this. We've got Kemi Badenoch versus Johnny Reynolds for Labour. And this is a really important moment, Tom, because the political consensus is that growth, economic growth, is crucial and business crucial to that. So we're going to have questions from the big five business lobby groups here. It'll be interesting to hear what their pitch is to business, how you fix the skill shortage without serious investment in education or a bit more migration, where they stand on Brexit, the elephant in the room of this campaign, what their long-term strategy is for the UK, for AI, for planning, for industrial strategy, even if it's not very sexy, and finally, how you reignite investment into the UK, whether you are going to be picky about if that investment comes from the likes of the Middle East and China.
OK, so there's a lot on the docket. In terms of the challenges, just briefly, facing whoever is in power after that election, July the 4th, talk to us about just what the picture is showing us in terms of the economic challenges.
It's really interesting to look at the misery index. This is something that was created in the 1970s. It brings together inflation and unemployment, and it shows that the first 18 months post-election, you're actually going to see more concerns about people not having a job because of that strong underlying wage growth. So a different problem to what Rishi Sunak's faced. And it comes back to what Philip Hammond said. Anyone who tells you that you can have tax cuts and improve public services is not being straight with you. This is the fiscal dilemma.
Lizzie Burton, our UK correspondent, thank you very much indeed. And as we've been discussing, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds will go head-to-head in our live televised debate, moderated by Bloomberg's Anna Edwards. Viewers in the UK can catch the business debate at 12:30 p.m. UK time today on Bloomberg TV. Up next, Bloomberg Brief. This is Bloomberg.